What's going on, YouTube? Welcome back to another video, and I'm going to talk about a topic today that has been like my number one most asked question day in and day out, whether you're in my private mentorship program or if you're just somebody that follows my content and wonders how we do what we do, is how do I manage a trade? How, when I'm up in profit or if I'm taking your trade signals or alerts, how can I maximize this trade idea? Now, this video is not just made for my students and for people that are in akashx, but really, I started this industry of trading by following other people, right? I think the majority of us that get into, whether it's an academy, following your favorite IG influencer, trader, whatever the case is, you've probably been a part of a signal room or you're just taking trades from somebody else, right? Because you want to start making money as quickly as possible. You want to start taking quality trades before you even know what the hell you're doing on a chart. And you see, there is an art to copying and pasting somebody else's trades. There's an art to how you actually take signals the right way. Because I'm sure that you've experienced in your time, and if not you, thousands of other people for sure know what I'm going to say right now, which is, man, I'm taking these signals, but like there's people winning and then I'm not winning, right? Or this person's making this much and I'm not making that much. Whatever the case is, I'm going to show you and debunk all the BS and like the real about how you properly take someone else's trades or how to properly trade manage an open position so that you can make that trade really do the most positive to your account as possible and also minimizing your losses, your downside, etc. So let's get straight into it on these charts. All right, so first and foremost, we're gonna head over to akashx.com. And for those that have no idea what akashx is, this is our private mentorship program where I personally educate, send live trade ideas. I do my live sessions. Pretty much the real access to me is through this platform. And so I'm going to show you guys this week's trades that were sent via the app, sent via our website that you could have taken with me in real time. So we're going to head over to the trade alerts section here and we're going to filter this out for NAS 100. So for those that don't know, I pretty much just exclusively trade NAS 100. It has become my signature pair that I've pretty much mastered to this point and continue to improve on. And this week, we actually took about a total of 5 trades. One of them was on the live session, and the other 4 were trade alerts sent directly on the app right here. And we actually won 4 and lost 1 trade. And the crazy thing is, the 1 trade that we lost this week was by 1 pip. Like it literally hit our stop loss by a pip and then dropped straight to profit. So it is what it is. That is to say that these signals that I send for NAS for the most part, for all of 2024, if you check the track record here, have hit targets time in and time out. I do lose like anybody else, right? Last week I went 0-2 during Thanksgiving week. Very whack market conditions. Week prior, I was 6-0. So between the last 3 weeks, I'm collectively, I'd say like 10-3, right? 10 wins, 3 losses, something like that. So for the most part, people that are taking my trades on the platform are definitely seeing results. It's undeniable. But the reality is some of the trades that I send out are these really long running trades that just go for thousands of pips on NAS. Other trades are going for maybe 500 to 1,000 or less pips and then reversing. And then we have obviously our planned losses that are going to come, right? So for the most part, again, not every single trade is going to be made equal. Not every trade is going to play out the same. And so I want to show you when you're taking trade alerts, how you can actually manage the trades and what's the reality of, taking the consistent signals from one person, right? Now, really quickly, I want you to understand just in our platform alone, we have many educators, right? It's not just me, right? We got John Leal sending trades here, Brent, Mohammed. There's a lot of different people that can send trade alerts. And this is just NAS 100. You're going to have people trading Bitcoin. You're going to have people trading gold. You're going to have people trading forex pairs, right? So with that said, you need to understand first and foremost who you're taking the trades from, right? People that follow me closely know how I do my risk, how often I'm sending trades. They know my strategy in detail. So when you actually get involved with a trader and you want to start learning their ways and kind of, being their mentee or disciple, whatever you want to call it, you got to stick with them long term. Because a big problem that I see people have, and I went through this too as a student coming up in the industry, is that you will go strategy hopping or you will go educator / trader hopping where you're like, oh, I'm going to go with this person. And then after like a week and a half, maybe they didn't have the craziest run. And so you're like, oh, I'm not going to go with them no more. I'm going to try this guy out. And then you just keep bouncing around, right? So for example, anybody that got started with me last week or was part of our company last week was like, oh, this guy sent only 2 trades all week and they both lost. This guy sucks, right? Just keeping it absolutely real. Well, it was Thanksgiving week, right? Somebody new doesn't know these things, right? They're like, oh, I don't know. I paid my membership. I'm here to make some money. Let's go. And the markets don't work that way, man. Because again, this week we're 4-1. The week prior to that 0-2 week, we were 6-0. So if you picked and choose to follow me that one week that I went 0-2, well, the week before you missed blessings, and this week you missed blessings. And that's going to happen regardless of who you follow. You're going to have winning streaks, losing streaks, etc. So you need to follow somebody consistently over time to really try to, mirror their type of results as much as possible. And that's a big problem people have, is staying consistent. It's, always like ride or die with whoever you decide to follow. So do your due diligence of who you want to follow first, right? If you want to do it on a demo account, whatever the case is, you need to give somebody more of an extended period to really see if they actually know their trading system, if they're actually consistent with their approach, their entries, why they do what they do. If you see that, then okay, I think this person's worthy of following, and then you just go about it, right? We're gonna go over a couple trades here. I really want to highlight one of our biggest winners, right, for the week. So it was this trade here that was about 3 days ago. It was a NAS 100 buy, and this trade ran for a total of 2,000 pips for over a 4-to-1 risk to reward ratio. Now I want to go over this trade, and we'll go over some other ones as well, but I really want to highlight this one because there was a lot of people that took this trade that made a good amount of profit, and there was some other people that they got scared. They pulled out of the trade early with some profit, but they really missed out on a special trade, right? And so I want to show you my real process of, if I was in your shoes, how I would follow these trade alerts to really maximize it. Now, I want to start by saying this as well. There's people that are very busy and they do a lot of things aside from trading that they cannot afford to actively manage a trade more closely. And then there's people that actually can manage a trade more closely. So I'm going to talk about those 2 types of people and what you can do in those situations, right? So person number 1, you're super busy. You don't have time to manage the trades. I get it, right? 2 things I'm going to say about that. Number 1, we have something called tap to trade. Now, tap to trade is a technology that we created here in akashx, where essentially you're going to be able to link your account, your trading account, to our akashx back office. And whenever an educator like myself calls out a tap to trade alert, you're going to be able to have that trade approved on your end, and we will go and actively manage that trade for you from start to finish. That has been an absolute game changer, and what has brought a lot of people into akashx is for that technology alone. You guys can find out more information on tap to trade and what akashx really is by clicking up on this link where I break down our platform in more detail. But we're going to stick to trade alerts in this video right now, okay? And with trade alerts, guys, you're going to receive the trade alert. It's going to have an entry price. It's going to have stop loss. It's going to have multiple take profit targets, okay? And again, people are going to say, well, Rich, I don't know which take profit to choose. Should I go with TP1? Should I go with TP2, 3, 4, 5? Like, how should I do it? So this is what I'm going to recommend, okay? Now, first of all, there are traders that like to split their entries or their positions into multiple orders, meaning that if you're going to jump into a trade, let's say we have a 10,000 funded account, right? I bring this up because when it comes to funded accounts, this is typically the standard smallest account size that you can get on a funded account. Here for our akashx members, when someone gets brand new started with our program, you're actually gifted a $10,000 challenge account up front just for being part of the company. So I want to really use this as a reference point, right? And on your $10,000 funded account, I recommend that you risk no more, right? So risk, we're just going to go with 1%, right? Now, am I saying that you should be risking 1% per trade? Not necessarily. In fact, if you're going to be taking trades from multiple people and maybe even your own trades, you need to be cutting that risk maybe to 0.5% or even maybe less, at least when you're newer and you're getting used to that account, because the last thing you want to do is try to pass it too fast or just get ahead of yourself and pretty much put yourself in a deep drawdown really early on, because that can easily happen, losing 2 or 3 trades in a row. And at 1% risk, it's not going to feel good to be down 2-3%, you know, in your challenge account, especially when you've never been through that, right? But for the example and simplicity purposes, we're going to go ahead and run it as 1% risk on this trading account, okay? So 1% risk of that $10,000 funded account is going to be $100. Now, when you're going to risk that $100, there's 2 different ways you can go about understanding how to do that on your Trade Locker account, MetaTrader, whatever platform you're executing your trades on, right? Are you going to be using that system that's going to show you how to actually calculate your lot size, or do you know how to calculate your lot size? So for example, I always teach this in our risk management series, right? How you do your lot size, right? Unless you use the Trade Locker built-in features, if you're on that, then you can easily just type in all the numbers. It's going to populate it for you. But if you want to understand how to calculate your risk, basically you do money risked divided by number of pips in stop loss multiplied by 10. So for example, my setups are always 500 pip stop loss. In this example, we're going to risk $100, which is that 1% risk. So $100 divided by the 500 pip stop loss times 10. So if you do 500 times 10, right, that's 5,000. So you do 100 divided by 5,000. Now when you do 100 divided by 5,000, you're going to get your lot size, which should come out to 0.02 lot size. Now again, different brokers, prop firms, they're going to do their lot sizes and the way they calculate these pips sometimes a little bit different. But for the most part, on these funded accounts with TradexMastery and on akashx, this is really what you're going to be used to probably using here, is these smaller lot sizes for sure, because it is more sensitive with the size of how many pips these setups that I'm calling are out, right? So 500 pips is usually what I use every single setup. So you're going to be sticking to a 0.02 lot size, for example, on your 10K funded account. That's to risk 1%. Now, I bring this example up because we said that if you're going to get on your funded account and you're going to, want to split your position into multiple entries, right? Well, the first issue is on my trades that have a wider stop, because NAS 100 is very volatile and you're not going to be able to cut it down more than a 0.02. You can't really split this position into more than 2 entries at 0.01 each to risk 1%. And like I mentioned, you probably want to even risk less than 1%. So if you're trying to risk, let's say 0.5%, then you can only drop a 0.01 lot size one time on my trades. This is why I say I don't personally like splitting a position multiple ways, where you're jumping in, like to my opportunities, and you jump in 5 times, for example, and you cut the risk. I don't recommend you do that. Some people like trading that way. To each his own. I think you should just stick to one position, right? Jumping in, let's say at a 0.02 lot size, and then managing it like I'm going to show you right now. All right, so if we head over to akashx, we're going to see this trade alert, where again, our entry price was 21,170, stop loss 21,120. So if we head over to the chart, we're going to put a long position here, and our entry was at 21,170, which was right here. And we're going to go ahead and make that our typical 500 pip stop loss right here, which is 21,120, just as we see here. Now, TP1 is 21,195. 21,195 will be roughly right here for a half-hour multiple, meaning that we're risking 500 pips to make 250 pips as our first target for basically making half of what we risked. Now, I personally teach that you do not want to be closing positions really early, because if you always close at half an hour multiple, it basically means that if you have 1 loss, it's going to take 2 wins to recover that 1 loss. I like to trade the other way around, where we're going to have our profits be, double or more of our losses. So that way 1 win can cover 2 losses. To each his own. There's different methodologies, different ways of going about risk management and your win rate, right? We have plenty of other videos you guys can check out on the channel when it comes to that. But I'm showing you, my thought process here, right? TP1s are usually a great, place where if the market's really going to run in our favor, usually after a half hour multiple, we're pretty much usually in clear skies for this thing to just keep going, and we won't get our stop loss hit at break even. My ideal time for me to risk or to move my stop loss to entry is when we hit a 1-to-1 risk to reward ratio, which is typically my TP2s, okay? So this is my TP2 at 21,220. 21,220 is TP2. And then basically we keep putting our next profits at multiples of 500 pips, right? So 21,220, so 21,270 is our next TP level right here. And so that is now a 2-to-1 risk to reward. And we continue that way, right? TP4 is going to be a 3-to-1 risk to reward ratio right here. And then TP5 is going to be a 4-to-1 risk to reward ratio at 21,370. So this is basically the max that I say we should probably hold the trade for. If you're just going to keep it simple and you want to just exit with a really massive profit, you could even technically hold it further than that. But this is really ideally what I try to do is just get at least one 4-to-1 risk to reward trade a week. Because if we get one setup like this a week, all the other trades that are like very small winners, break even, losses are taken care of by this, and that's how we're going to be able to continuously be in profit. All right. So this is the setup. Obviously, in hindsight, we're looking at it fully forming, but I want to go back on the replay mode and I want to take us to when we got into the trade. All right. So let's take this back to a 5-minute. And when we were in this trade, first and foremost, you're already seeing how the emotions can start to flare up when we start taking these type of setups. Why do I say that? Because when we jump into the trade, we see that we got a nice impulse to the upside, getting close to our first target. But we don't hit that target. In fact, we come back to our entry. Now for me, I don't care at all in general because I already have my stop loss here for a reason. I have a planned loss that I'm already mentally okay with hitting because I trust my strategy, I trust my edge, and the probabilities of my trades hitting more times than not, and the risk to reward element taking care of my losses. So that's the number one thing, is the psychology is what's really holding you back more than anything because you're scared of losing. In trading, it's not about being right or wrong, it's about understanding that it is a probabilities game, and as long as you have an edge or a strategy that is going to, over a series of trades, take care of your losses with your wins, then you just have to go and execute the system. Simply put, you can learn from Mark Douglas, Trading in the Zone, The Disciplined Trader, all his content teaching about that exact thing I just said right now. So point is, somebody's in, they're up in profit, half an hour multiple, come back to entry. There's probably already people scared there and pulling out of the trade because they were in profits and now they're back to their entry and they're freaking out, right? It's all here. It's all here in your mind. But this is the real time of what's happening, okay? So at this point, I'm not telling you to close the trade. I'm not saying to move stops to break even, none of that. Price goes into some more drawdown, right? And I had seen people in the chat like, oh, we're looking like we're heading into drawdown. What do we do? Are we good? Like right here, people are already thinking we're going to hit stop loss, right? And I think here we recover, end up hitting TP1. At that point, this is the earliest that we can already start moving our stop loss to break even. So again, let's say we have our stop loss here. We're going to make this bigger. Stop loss, right? This big red line is going to be our stop loss. Let me lock this. All right, so stop loss here, right? Okay, now we hit TP1. TP1 hit, boom, congrats, right? Half an hour multiple. We can move our stop loss to break even at earliest at this point. Again, for me, I personally wouldn't move it that fast. But even if you did, I want to show you something, right? And keep in mind, guys, when you move your stop loss, don't move it to your exact entry. Move it slightly above it, so that way you have spread and all those things into consideration, okay? So price hits TP1. Price continues to climb a little bit. And now we start heading back towards our entry a bit. See, somebody is going to see that they were up almost a 1-to-1 ratio here. and coming back down to break even, and they're like, man, I should have, I'm going to close the trade because we're turning around, or, oh man, why didn't I close here? Now I'm making less money, right? Again, you're not letting the trade develop. You're just trying to squeeze any type of quick profits that you're seeing on the screen. You got to be able to just allow the trade to play out, right? What happens is price comes back up, and now we start breaking structure above these previous highs, and we hit TP2. Boom. So look, if you're somebody that is taking trades from multiple educators, you really can't be looking at charts like that. And this specific trade is not a tap to trade. It's one of those that you have to take manually. You can decide to just close 1-to-1 risk to reward ratios. And even just my win rate alone, you'll be in profit, but you're going to be missing out on a lot more profit. So my bare minimum suggestion of just getting by and seeing some type of progress is closing 1-to-1 risk to reward ratios. And as long as myself or whoever you're taking these trades from wins more than 60% of the time, right, you're technically going to make some profit. But again, in my situation, the magic really comes from holding a trade for at minimum 2-to-1, at minimum, right? So boom, TP2 is hit. I want you to start paying attention to structure. Remember, this was that last high before we got this big drop off that even led me to entering the market. This was the last lowest point here. We ended up hitting TP1, reversing to here, and now making a new high. This is why you need to understand basics and market structure if you want to maximize your trade management and you want to make the most out of signals. Because now what you can easily say is, okay, structure-wise, we are taught that we need to be making new highs, pullback, new high, pullback, new high, right? Continuing the trend. So you can move your stop loss and trail it at structure, which is what I'm going to show you now. That's what I highly recommend people to do. So you take that stop loss, we can move it to this low now. You're basically still breaking even more or less around there, but this is how you can manage this trade. Price is continuing to move. And now we see a new low posted in the market right here. We can go and take that stop loss and edit it to here now. So now if you do end up having the market reverse on you, you're basically closing a little bit over a half hour multiple, basically a little bit past TP1. All right, guaranteed. You're now guaranteed to be basically above a TP1. All right, boom, we hit TP3, 2-to-1 risk to reward ratio. Again, at that point, if you're happy, if your trading plan is to close 2-to-1s, you can close it. But there's nothing that the market is telling you that you need to close this trade. Why? Because structure is still pushing bullish with a lot of momentum. Price comes, continues to go. Now we get our first little pullback right here and a new high. So we have a new high right here, a pullback, and a new high. Now guess what? We can trail this stop to this low. And now you are guaranteed to book from entry about 1,000 pips for a 2-to-1 risk to reward ratio. Guaranteed. But guess what? You're still letting the trade develop, right? There's no reason to exit. You just trail your stop loss and let it keep going and see if it has some more left to give. Price pulls back. Sitting around. We're out of New York session at this point. And guess what? We end up hitting TP4, right? This is a 3-to-1 risk to reward ratio now, right? You can take that trail stop, you can move it to this low now, you can move it to this low, however you want to trail it, that's fine. Honestly, once you're at 3-to-1 risk to reward ratio, I think you can even close most of the position and just let the rest trail, like a very small trailing stop loss. I'm sorry, you can leave a smaller partial open position, right? But again, even if you're just trailing based on structure, again, you have this high, you have these lows forming, right? You can see that there's no time where the market has shifted direction on us, right? Now we have a new low as price is making a new high. And here you're already guaranteeing your 3-to-1 risk to reward ratio, basically. And then eventually we hit full target right there. And again, at that point, you can exit that position, 4-to-1 risk to reward ratio booked. And all you did was just move your stop loss along the way. And the funny thing is you could keep moving that stop loss even to here and keep allowing the market to develop. You see a new low. Now you're guaranteed the 4-to-1 risk to reward ratio. Now here you're stopped. See? So now you see we had a big structure shift and it continued higher, right? But who cares? Because you booked a 4-to-1. So even if it kept going higher, you safely managed to trade the right way. Again, not everybody's going to have the time or the means or the desire to manage a trade that closely. But here's the thing, guys. Here's the magic that I tell people all the time. It's not about trying to take a million trades. It's not about trying to win all the time. It's about just really quality opportunities with the right amount of capital. Because even though you might be trading a $10,000 funded account now, if you build the right habits and you get max funding with TradexMastery, which by the way, you guys can find the links in the description for TradexMastery, prop firm of choice within here. I got akashx for myself and whatnot that we're using where you can get up to 200K in capital. And when you take a trade like this, risking 1%, that's risking $2,000, $2,000 for a 4% profit, which comes out to $8,000. At a 80-20 split, you're basically keeping a little over 6,500, right? 6K plus. Like definitely more than 6K because 6K is 75%, right? So 6,000 plus profit. After profit splits and everything off of one trade. One trade. Obviously, you got to pass your phase 1. You got to pass your phase 2. I understand that. But what I'm saying is once you have that account, you can literally take one setup like this for the month. And you can have this type of payout. And this is type of money that almost nobody in the world makes. And even if you live in better, conditions like, myself here in the US, you're already used to higher incomes, fine. Continue to scale this. This could be just a week. This is really just one day, one trade though, right? But we're not always going to get, days in the market where we catch a really big win like this, but they do come. And we're taking them together with the students in real time. But there's people that are not understanding structure, that are scared, or they're just not understanding the basics to know that the market is literally telling us to keep holding. But we got to understand you have to understand how to manage these trades, because if not, you're going to cut your trade here when you could have made over here, right? And it's all in your emotions and your understanding of how the market, forms, right? So this is a beautiful example of how trade management, I teach it to allow yourself to keep milking a signal, a profit as much as possible. And the same thing goes, for opportunities where we're not catching a huge, profit. And by the way, again, that trade has continued to just absolutely skyrocket from this point. So if you're able to swing trade and really hold a position like that on like some personal accounts, I mean, this was a monster entry for what has been a very bullish NAS to end the year, which we've seen time and time again. NASDAQ and the indices during the holiday season, it goes ballistic, right? But yeah, man, today we actually called our last trade of the week. I actually called sells at 21,590. So this was basically the candle that allowed me to see that I personally wanted to enter this trade. This is not my signature strategy by any means. And I wasn't even really looking for a 4-to-1. I was looking more for a 1-to-1 plus type of trade and exiting, just because it's a Friday today. The market is obviously very, very bullish, so we're going counter trend on this example. But we just had NFP today, which is this crazy little candle that we see here. This is NFP that you guys can see on Forex Factory right here. All right, so we know that I don't usually like trading NFPs or anything, but we got that initial rally, right? And so at some point, we needed that pullback, right? At least half of this move, and that's basically what we got. But I know there were some people that wanted to obviously catch another 4-to-1 risk to reward ratio, right? But again, the reality is to catch those higher risk to reward opportunities, typically, especially with NAS, it's going to be on a buy opportunity where we're catching the momentum and, the natural trend for indices, which is just a bullish market. So, counter trend, smaller trade in this example, but we saw that price finally was running out of gas from this very strong impulse during NFP. got those first initial rejections where price continued to fail to make new highs, decided to pull the trigger with a very, safe 500 pip stop if we were going to be right on this trade. And yeah, basically this trade instantly went TP1, 250 points at 565, okay? And then we had TP2 sitting at 540, okay? So this was TP2. Personally, again, I wasn't trying to really catch a banger trade because I understand that we're looking for a counter trend trade. A 1-to-1 risk to reward ratio is pretty solid, especially after already catching a 4% gainer for the week. How much could we really continue to expect, from the market, right? I think if you're able to get 1, 3, or 4-to-1 risk to reward ratio trade a week, especially that I don't scalp, right? I'm doing more of an intraday, 500 pip stop. It's very reasonable to just be cool with 1. If you get 2 a week, solid, right? So boom, we TP1'd, and this is why I personally don't really like, moving stop loss and everything like that too much after being up half an hour multiple. But we get that big drop right here, and then TP2's right here. Now again, you can instantly see already that the market hit that TP2 and we start getting a very strong rejection. And essentially we basically come back to below TP1 and then we come back to break even. So I tell people that the absolute truth of this is, look, if you go break even on a trade like this because you were expecting more, take the break even, because you're gonna save so much profit that you're gonna throw away by not doing that, right? Not every trade's gonna be a home run. If you keep expecting every trade to be an absolute home run, you're gonna throw away a lot of your equity on trying to chase the home runs with all these -1%ers that could have just been a break even, right? Obviously, I have students that did close TP1s, TP2s because they just do that religiously, which again, I don't think I recommend in general. But in this situation, I was looking for just the TP1, or I'm sorry, I was looking for just the TP2 for a 1-to-1 risk to reward ratio, and I was cool with that, exited the trade. Now, some people want to stay in, whatever. This is what happens, right? Price came back, ends up touching TP1 again, second time around, right? But I tell people, they're like, oh, should I re-enter the trade? I don't like re-entries because as we saw with that other setup that ran for a 4-to-1, it never needed to do that. A lot of times my setups, the way I trade, is if price is right, it's going to go and it's going to leave. It's not going to come back. I'm not a break and retest trader. The way I trade based off my back testing is when we're right very quickly and it's gone. When we're partially right, it'll just kind of move a little bit and then sit around and then reverse eventually, and we don't want to stick around for that. Right? So this is just real trade management, real things that happen. Again, context, right? Today's NFP, it's Friday. There's just a lot going on, right? And look, people were probably in drawdown still holding here. Price comes back to entry. These are the type of setups that you just don't want to be in, because price on our winners should never do this, ever. If price goes in and out of drawdown like this, you need to clip that trade break even and move on. And if you want to close 1-to-1s, again, I said it, for the people that just close 1-to-1s religiously, you would have closed profit on this one and the last trade, and you'd be up 2% for the week and you're done. And there's nothing wrong with that, right? You're going to go slower, but you're still booking your profits and you're still getting the job done. But eventually we see this trade basically, got very close to stop multiple times, and we've pretty much ended the day here. And for all we know, when the market reopens back, this thing can end up coming down. And I do expect NAS to end up dropping, but as far as, again, you're taking a signal, you're taking trades from somebody, you want to get to know how they trade, how their strategy works, and, what typically happens with the signals. And for me, we're going to get once in a while those really nice 3-to-1, 4-to-1 trades, and the other ones are going to go 1-to-1s, reverse. You could have snagged a 1%er, break even, whatever the case is, and then a couple losses, right? So again, last 13 trades, 10 wins, 3 absolute just straight stop losses, right? And out of these 10 trades, a handful are 3-to-1, 4-to-1, big trades, and the other ones are like 1%ers. You got some 2%ers. And then a bunch of like 0.5s that I consider, break even. Like you just take the break even and keep it moving. And look, you're going to make mistakes. Sometimes you're going to close too early. Sometimes you're going to close too soon. You're never going to get it perfectly right every single time. You just need to see what are the things that tend to happen to you over and over and make adjustments from there. Some people are going to notice that they keep holding on too long for targets and you need to clip it short. Other people are going to notice that they clip it short way too much and need to hold longer. So journal, get to know what's happening to you specifically, and then pivot from there. All right, so that was a very in-depth training. I haven't really done that for YouTube in quite some time, but I wanted to make sure that you guys have this gem of a video, whether you're in akashx or not, to basically just get better at trade management, whether it's your own trades or if you're following one of your favorite signal callers from the internet and you want to know how to do it more properly. These are my tips that I think will absolutely make a huge difference for you. But guys, with that said, please make sure to like, comment, subscribe, share this channel. We're closing in on 600 subs. So I appreciate it. We've had immense growth throughout this entire year of 2024, and it wouldn't be possible without each and every single one of you guys constantly tuning into this content. So guys, remember, you have the links in the description if you guys want to get your funded accounts with TradexMastery. If you guys want to join the mentorship program with akashx and take my NAS 100 alerts, as well as all the other value that we have going on 24/7, 365. So with that said, guys, hope you have an amazing weekend, and let's run it up.